All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and England saved the stock market. Today was absolutely insane. If you didn't hear, the Bank of England intervened with the bond market. Essentially, they brought back some form of temporary quantitative easing, and this has a ton of implications. But right off the bat, I'm sure you've seen it. This was the biggest cross asset rally since April 2020. That means bonds, stocks, commodities, oil, energy, literally every single asset combined. I think it was like 12% positive today. So that's one thing. And then even on the bond market, the fact that the Bank of England stepped in, it calmed down everything across the globe, and literally that dollar relief, you finally saw how it had played out on the market. But this was the biggest decrease in one day on the 10-year United States bond since 2009. So I'm telling you, it was absolutely wild. So I have a breakdown for you. I'm going to explain everything that happened and what it really means, because some of the implications for today, it might change a little bit with what we've been seeing. Other than that, though, I do still have a prediction for how I think things are going to play out. But here are the hold-ins. We talked about it yesterday. Like I said, I'm expecting downside with a little bit of the upside. I was able to close out that future with profit, believe it or not. So we're going to talk about that. But one thing I want to highlight here is that we are in peak volatility, and now this is what it's starting to look like. And like I've been saying with the options, all of that, there's just one thing unique here. You'll notice I even added a Dow short last night. We're going to talk about that too, but I am up on both puts and calls right now, or excuse me, long and short. They're both positive that I'm holding, and we've gotten to take profits all throughout. Remember, we took some profits on things yesterday, so we have a lot to talk about. I got the recap, I got the plays, and then everything related to that. So drop your thumbs up on the video, make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. It's free 99. I don't even know what I'm doing. Guess what? You know what's underneath this, bro? I was just getting cold. I was wearing this before we rally. Yeah, if you know, you know. If you know, run it, baby.
Working to the couch, it's the joints on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, the Bank of England, they literally saved the world. Again, we were talking that scene in Top Gun. This is what I was talking about yesterday with the bonds and dollars. Again, this is still all in play. This isn't going anywhere, but with everything we've talked about this whole week with the bonds and all of that, it's wild. I was saying until it just stops, that's the only way we get out of this. Them stepping in and intervening with their markets today, that is what really helped it. But now the implications of this are nasty, man. I'm telling you, it is wicked. One, off the bat, they said it's going to be temporary, and even in general, anytime you see a central bank react and make a big movement, again, especially considering how the last few days have played out in all of their new announcements, that means it's most likely going to get worse, but they just kind of delayed it or slowed it down. But now this is where it gets really wicked. A lot of people now, after watching the Bank of England step in and say, no, we got to intervene, this is getting bad, some people now are going to start calling for a central bank bluff. They're going to say, well, look, this is evidence right here, right now in this environment that these central banks will pivot the minute anything gets bad or the minute it's at the cusp of it. And again, that applies to what I've always said with central banks. They will react right when it's about to hit the fan, if you know what I'm saying. So keep that in mind, but let me give you a simple breakdown of all of it. If you don't understand what happened, the first major thing is that they stopped some form of financial collapse or of the financial system kind of breaking down. They even said it themselves, and that was one of their reasons. But how did they do that? They announced today that they are going to buy an unlimited amount of 30-year Bank of England 30-year bonds. And this is important because essentially this is quantitative easing. So they're saying, yeah, we need a raise. We got to raise 75. And then they announced that tax plan, and we're going to talk about that. But now they're saying here, well, even though they were trying to tighten, this is that gas and brake at the same time. They're literally saying, well, we are going to buy the bonds and support the bond market. And the reason was, if the bond yields kept going higher and they did not provide that demand to stabilize it, they're saying it would have blew up a bunch of pensions. There are a bunch of margin calls on the line, and then mortgage rates in the United Kingdom, I think more than a quarter or about a third of them are on variable rates. So the higher bond yields go, that means a lot of mortgage prices in the UK, they would shoot up alongside energy prices and all of that. But with this in mind, pretty much all they did is they are adding easing and intervention on the bond market, and it is keeping the 30-year UK bond from going any higher. And now why you got to understand that, because this is what I'm saying. Today was the first action. Who knows whether it's 1 week, 2 weeks, even a month, maybe a couple months. But if those UK bond yields start going back up, this fear is not going to disappear. This will always remain. It's a simple fact. And now we know a danger point, just like the yen at 145. It's very simple here. If that 30-year yield on the UK bond goes above 5, that means they're going to probably be in a world of hurt. So that's the first thing. The second thing now, and this is what I'm saying with some of the implication, the fact that they brought out this tax plan and did all of this a couple of days ago and now are immediately going towards bond intervention and QE, essentially, this is bringing back the idea that central banks will actually pivot even despite the environment, the effort, and all of that. I'm telling you, this is very, very huge, because if this idea takes hold, people might go crazy with it. And now we're even going to have to follow up and see how Powell and everybody else responds. So in short, all that happened over the last couple of days, and to understand what was going on, again, you got to understand the influence of the dollar and bonds and even the yen, but just like global dollar strength, and then bond yields have been wrecking things. But in short, England caused the panic with their inflation they were already having, and then they brought up that tax plan, which really scared people, but then they temporarily solved the problem today by intervening with the market. So pretty much inflation was bad. They said, nah, we're going to tighten, we're going to raise rates. They started doing that, and then in the middle of doing that, they said, we're also going to ease with the tax plan, and then everybody freaked out, and then in the process of freaking out about the break things, they said, well, we have a solution, and we're going to intervene now too. And that is what we got. But coming to your final key now, I have a lot of other things, and one thing you got to keep in mind is tomorrow you will be getting German data, and we're going to see what's happening. But like I'm saying, if we start to watch bets and you start to get a narrative and money really starts betting on this idea of calling the bluff, and everyone's like, yeah, no, now we know central bankers will pivot the minute it gets bad, that could kind of spark some of those or ease the financial conditions that could cause one of those most hated rally. That will be something to watch, and that could make us rally hard. Otherwise, I think this is going to play out just like we saw May 9th and May 10th. And here's the chart. This was the first time we came into like a new low, kind of capitulated. It wasn't too bad, but we hit a low. We bounced up for like 4 or 5 days, came right back down. We flashed and hit a wick into the lower low, and then we bounced up. And then you'll see later it was CPI and all of that. And then we dumped. And then ironically enough, end of this week, that's the end of the quarter, end of the month. Before you know it now, I think 2 weeks, people will set up for bank earnings and even Netflix, and then 20 days from now you're going to have the CPI, and then right after the CPI it'll be Powell. So you're kind of watching the stars align, but that's what I think, or that's how I think it's going to play out. We're going to see still holding the positions, and like I'm saying now too, data tomorrow in Germany can move things, and like we said yesterday, consumer sentiment, definitely keep an eye out for that. But I hope you're ready. But let us get into the plays. So right off the bat, made not a bunch of plays, but again, just combined with yesterday, it was an absolutely crazy day. So I guess we'll just go over that after I get over the first three and we'll cover it. But as far as the first play, Apple, I made a play on this one. I was up a lot on it early in the morning, and then it started to turn against me with the bounce. And it literally right here, Apple can bounce, but any sign of bad news, I think it's going to come back to this point. What I'm trying to say is that look at the price today based on this news of the slowing demand demand, this will be an inflection point or pivot. Whether we go up or down, you are going to visit this depending on how the market moves or the news. So I'm keeping that in mind, but then someone brought this up on stream and I really do agree with it. It reminds me of that Nvidia move a couple of weeks ago. So it is Apple and they're a little bit stronger. So we will see, but I went short. I did 50 shares at 147.72. So I didn't lose too much. Again, I just shorted it after the pre-market bounce and then it dropped. So I got a decent price, but still holding those. I think I'm down on them, but not more than like $1 or $2 per share. But that is play number one. Then play number two, I made this one today and I even got clapped on. I'm down like $300-400, but HD, they're benefiting off of the hurricane for now, but there could be a lot of upside if there is a quality rip. Otherwise, I think they might get beaten down, but I do think now if we get that May 10th reaction, I think I could get like $8 to $10 a share out of this one. That's why I like it, and then it could like bounce another $5, but if this runs too much, this one you might see me stop out of and I'll actually like take the loss. I'm not going to hold it the same way just because there is a lot of upside, but if we get that May 9th, May 10th reaction, I think it'll come down. So I feel like to have some exposure, it would be good, but I messed up on this play. I shorted 50 shares in the morning at 277.67, and then it went against me $2. I was only down $100, and then I averaged down again. Usually, you guys have seen it lately. I would like wait a couple of days. Again, with a small, I don't like to do it that early, but I figured with everything it might, but I think that was a mistake. So we'll see what happens, but definitely watching HD. I think upside and downside, this could be one of those that move, especially with the news and everything else going on. But that is play number two, and then finally, play number three, baby. Qualcomm. They got hit by the Apple news. I don't have a play in this, but this is the one I'm going to be watching here as we move forward. And again, the chips have been interesting, but they got hit by the Apple news. All the Apple suppliers, Qualcomm, Skyworks, and there was one more. They got killed. Apple was able to come back up, but Qualcomm, they were still down by the end of the day, and they're at their lows of the year already. But then I compared it to Skyworks, and Skyworks, they haven't hit their yearly lows like Nvidia, so it looks like Nvidia is leading the way. But then you pull up like the 1 or 2 year, and you'll notice, well, Skyworks is dumping more than Nvidia, but pretty much a lot of the companies now related to Apple, they might get hit or essentially they just can't brush off any of the bad news as easy as Apple can, but we'll see depending on how the market plays out. But Qualcomm, no plays on that, but I'm definitely going to be watching that. But those are the main plays. As far as everything else, let's actually get into the trades and then we'll go over what I'm holding. But here it is. I started with that Apple in the morning, went short on it. Again, I could have closed out even, I think I hit like $4 a share or something, but I just decided to hold it there. Again, we were dealing with holding that long ES, and you guys saw that was negative yesterday, but opened up that Apple. Then I went long on the pound, and we've been talking about this, and this one was crazy. I flipped it, I think like what, 30 minutes or 20 minutes later. This was in anticipation of the bond buying activity they announced in England. They said it was going to start at European close, and the logic was right. It even ran up way more. I probably could have made like $1,200 on this one, but I ended up closing it. I made like $360 on a day trade. And then after that, you'll see that ZNZ22, that was the bond play from yesterday. Again, this was the biggest one-day rally on bonds or the 10-year since 2009. So I was up $1,000 on that one. I just closed out of it. I was like, all right, I held it. Even a little, I would have made like an extra couple $100, but I thought we did good on it. And then I lost a couple hundred on the TLT. Remember, we had the other put there, but that one was that older play that we were holding. But there was that one. Closed out of the JB Hunt. I was negative on it yesterday, went back up to like $60 profit, $1 per share. Just wanted to close out, did the HDs, and then I sold out of the ES from yesterday at $37.35. I made about like $700 or $600 net profit on that. Remember, we were down on it, and then I'm still holding the option. That's what we're going to go over. And then I went for another little day trade at the 374. I made like $60, closed it out. It was only for about like a minute and a half or anything like that. But those were the trades that I made. Now getting into what I'm holding, again, the disclaimer, there's a couple I'm missing. Even Netflix is at the bottom. We're down like $70 on that now. That one would have been a good one we should have cut out. But remember, we realized a bunch of the puts yesterday. The biggest play I was down on yesterday, I was able to exit now for a $700 profit. And as you see here, I am still holding $600 of profit. Remember, we were talking even the midterm bounce. Again, this kind of played out a little bit earlier, but I went to those November end of the month contracts on the futures. Those are up. So now I'm holding those in conjunction now with the micro shorts and then the MNQ. And like I'm saying, this is what I want you to see. There is the MYM, and this one crushed me today, but I do like it. I added this one after hours, like at like 8 or 9 p.m. That Apple news came out and things started dumping. Again, the watch list was already out and everything. Decided I would add to some of that. It was like 29 or like 29,000, and I was just looking to break the 2,900. I even had in the morning, I could have took profit, but I said, you know what? Let's ride it out. I think we could maneuver. But even then, if you even take that $1,500, I mean, add up the play that we were able to take to the upside, but even just look, and this is what I want you to see, out of all of these plays, again, Apple short, HD short, but EWG, that's making us money to the downside. But you'll notice I'm up on calls and puts right now. And this is a great position to be in. And this is what exemplifies. And like we've been saying with all the premium and all of that, I hope you could be able to pull this off, but I don't think I would have been able to do this with just purely options. So I'm liking the dollar for dollar move. It's been playing out decent, but still riding all of those. Still in the UNG. I think it might heat up. And again, watching out. I didn't do it today, but I'm going to do it eventually, man. I need to add. I added last week. Maybe I'll just do it once a week. So we'll see by Friday, but going to be watching those, riding out everything we're in. I pretty much just plan to hold the options now. We'll see with the downside. I don't think I'm going to close them just yet. And then until I get like a little bit more space or we see these levels, then we're going to see where everything goes. And I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the only person that could take you out of this is you. I'm telling you, I know it's crazy. I know it's the wildest move since this and that, but I'm telling you, bro, it is all emotions. Get in control, stay in the game, and stay prepared. And listen, don't let 1 day, 2 days of good or bad get to your head. You got to shake it all off and get prepared. Again, this is one move now. This is one setup, but there's going to be a lot more, and you got to think ahead. And Chad, you're already prepared for it. So let's go, baby. Keep that Amor Fati alive. That means vibe with it. Roll with it. You see what I'm saying? Don't be scared and embrace it. Enjoy it. Enjoy your life. And I hope you're ready for it. And I hope you're learning. But Chad, I better see you in the morning. I'll see you tonight. Tomorrow. I don't even know. I'm just... They don't feel me, bro, but I love you. Have a good night. In Jesus' name. I almost said amen. Okay, that's it. I think because I'm sweating, I think I just need to get the bull on. You know what I'm saying? Honestly, I'll just kick it here for like a little bit and we could talk, but like there's no Chad. That's what I would do right now, but all right, I guess we'll just save it for Friday. I love you, Chad. And then these are my headphones. I don't want to leave. Okay, I'll see you in the morning then. Okay, you see me in the morning. All right, word, man. Keep it up. Yeah, no, I better see. You better wake up and drive and be positive. Yeah, you know what I'm saying? It's okay. And don't take anything too personal. I know. I'm sorry if I offended you in any way in the past, in the future, too. Okay, you know what I'm saying? We got vibes. Not getting too emotional. Is this a weird one, huh? Yeah. All right, I love you. I'll see you soon.